Hi, my name is Anas, and welcome to Canadian Core, your trusted source for everything related to personal finance, retirement planning, and Canadian financial tools. The March 2026 federal policy update is set to bring significant changes to Canada's senior benefits, particularly to CPP, Canada Pension Plan, and OAS, Old Age Security recipients. For seniors, these updates promise higher payments starting in March 2026, directly impacting how much money they'll receive each month. This new update, based on indexation adjustments, means seniors could see a substantial increase in their benefits, depending on their income and specific eligibility. However, it's important to understand that not all seniors will experience the same impact from this update. Factors like income level, whether you're already receiving benefits, and if you're eligible for additional support programs such as GIS, Guaranteed Income Supplement, will all influence how the changes apply to you. In this video, we'll break down everything you need to know about the March 2026 update, explaining how CPP and OAS payments will change, what you can expect in terms of the dollar amounts, and how the indexation adjustments will affect seniors. We'll also discuss the OAS clawback and how it may impact your benefits, along with practical advice on what actions you should take to maximize the benefit of these changes. What is the March 2026 federal update? In March 2026, the Canadian government is set to implement a federal policy update that will result in increased CPP and OAS payments for eligible seniors. This is part of an ongoing adjustment to help seniors keep up with the rising cost of living and inflation, particularly for those relying on fixed-income retirement benefits. One key factor behind this update is the use of the Consumer Price Index, CPI, a measure of inflation that tracks the price changes in a set basket of goods and services. The CPI is a crucial tool in determining how much CPP and OAS benefits should increase each year to ensure they maintain their value and purchasing power. How the indexation adjustment works. The CPI is applied to CPP and OAS benefits annually, meaning that the government uses it to adjust payments to keep up with inflation. For March 2026, the federal government will apply inflation-based adjustments based on the CPI. This will result in higher payments for seniors, but the exact increase will depend on the current inflation rate and your personal eligibility. It's important to note that this adjustment is permanent. Unlike a one-time bonus, this increase is a long-term adjustment that will be applied annually to ensure that benefits stay aligned with the changing cost of living. Seniors receiving OAS, CPP, and other income-related benefits can expect regular increases in their payments moving forward as long as inflation continues to rise. The March 2026 update marks a key moment for seniors, particularly those on a fixed income, as it represents a permanent boost to their financial security in retirement. How will the CPP and OAS payments change? The March 2026 update will bring significant changes to both CPP and OAS payments. These adjustments are a direct response to inflation and are part of the Canadian government's broader strategy to ensure that seniors receive adequate financial support throughout their retirement years. Let's break down how CPP and OAS payments will change and what that means for you. Changes to CPP payments. Canada Pension Plan, CPP, is based on the contributions you made during your working years. The amount you receive in CPP benefits depends on your lifetime contributions and when you begin taking the payments. CPP calculation. Your CPP benefits are calculated based on the average of your lifetime earnings and the contributions you've made over the years. The earlier you begin taking CPP, the lower your monthly payments will be, but you can delay your CPP to increase the amount you'll receive. For every year you delay taking CPP after the age of 65, you can increase your payment by 6% per year. So if you wait until 70, you could receive 30% more than if you started at 65. Impact of the update. With the March 2026 adjustment, CPP recipients will see an increase in their monthly payments, reflecting the inflation adjustment. The exact increase depends on the current inflation rate and how it affects your benefit amount. It could mean an extra 39-month or more, depending on your individual situation. OAS payments. Old Age Security, OAS, is another essential source of income for seniors. Unlike CPP, which is based on your contributions, OAS is a universal benefit based on your residency and the number of years you've lived in Canada. OAS calculation. OAS is typically paid to residents of Canada who are 65 and older. To receive full OAS, you need to have lived in Canada for at least 40 years since the age of 18. If you haven't lived in Canada for 40 years, the amount you receive will be prorated. For example, if you've lived in Canada for 30 years, you would receive 75% of the full OAS amount. Impact of the update. Like CPP, OAS payments will be increased in March 2026, based on inflation. For those receiving the full OAS, the increase could be around $21 a month, reflecting a 3% increase. Seniors who qualify for partial OAS will also see their benefits adjusted based on this indexation. This adjustment in CPP and OAS payments will be ongoing, meaning that seniors will continue to see increases each year to keep up with the rising cost of living. Scenarios to understand the impact. To help you better understand how the March 2026 update will affect different CPP and OAS recipients, let's walk through a few real-life scenarios. Each scenario shows how the indexation adjustment will impact seniors differently, depending on their age, income, and family status. Scenario 1. New CPP retiree in February 2026, 100 words. Imagine a senior who decides to apply for CPP in February 2026. Since the March 2026 update will apply to all current CPP recipients, the new indexation will apply to the senior's payments right away. If the senior has been working for many years, they'll start receiving their monthly CPP based on their lifetime contributions. With the indexation adjustment, the inflation-based increase will boost their payment by a certain percentage. However, this increase will be reflected in the first payment after they apply, making it an immediate boost to their monthly income. Scenario 2. OAS recipient in March 2026, 100 words. For a senior already receiving OAS, the March 2026 adjustment will be applied automatically to their monthly payments. The indexation will increase their payments by a percentage based on inflation, in most cases, around 3%. However, higher income seniors should keep in mind that the OAS clawback may affect how much they receive. If their net income exceeds the OAS clawback threshold, they may see a reduction in the total OAS payment, with 15% withheld from their monthly benefit. The indexation increase could be offset by the clawback for those with higher income. Scenario 3. Low-income senior with GIS, 100 words. Let's consider a low-income senior who is also receiving the Guaranteed Income Supplement, GIS. This senior will see an increase in both their OAS and GIS payments with the March 2026 update. The indexation adjustment will raise their OAS, but since they already receive GIS, the increase in their OAS will also be factored into their GIS eligibility. GIS payments are calculated based on the combined income, and the indexation will help increase the GIS payment as well. However, seniors should always check their taxable income to ensure they stay eligible for GIS. Scenario 4. Couple receiving CPP and OAS, 100 words. For a married couple receiving both CPP and OAS, the March 2026 update will apply separately to each spouse's benefits. If both partners are CPP recipients, their payments will be adjusted individually based on their contribution history and the indexation adjustment. For OAS, the increase will depend on each spouse's residency and years lived in Canada. Each spouse may experience different increases, with one partner receiving OAS and the other receiving partial OAS. This adjustment will help ensure that both partners benefit from the increase and see higher payments. Scenario 5. Near-Retiree watching changes, 100 words. For someone nearing retirement and planning to apply for CPP soon, the March 2026 updates are important to consider when making decisions about when to start receiving benefits. If you delay CPP until after age 65, you will receive 6% more per year for each year you delay, all the way until age 70. Watching the indexation adjustments in March 2026 can help you plan better. Delaying CPP could provide you with an even higher monthly benefit when you finally start receiving payments, especially as the inflation-based increases will add to the value of your payments over time. How much can you expect to receive? The March 2026 update will bring a boost to both CPP and OAS payments for eligible seniors, thanks to the indexation adjustment. Based on the inflation rate, approximately 2 to 3% for 2026, here's an estimate of how much you can expect to receive from both programs. CPP payment increase. The Canada Pension Plan, CPP, is designed to replace a portion of your income during retirement. The amount you receive is based on your lifetime contributions and the age at which you begin your payments. Maximum CPP 2026. The maximum amount a single retiree can receive from CPP is approximately $1,300 per month. With the 3% increase applied through indexation, this would add $39 to your monthly CPP payment, bringing it to a total of $1,330. This increase helps retirees keep pace with inflation, ensuring that the value of your CPP payments does not erode over time. If you're receiving less than the maximum based on your contributions, the percentage increase will apply to whatever amount you are currently receiving. OAS payment increase. The Old Age Security OAS payment is available to most seniors in Canada based on residency and the number of years you've lived in the country. Maximum OAS 2026. The maximum OAS payment for a single senior is around $700 per month. With the 3% increase applied, this would add $21 to your monthly payment, bringing your new OAS to $721 per month. The indexation adjustment also applies to partial OAS payments for seniors who have not lived in Canada for 40 years, with similar percentage increases. Total combined increase for both CPP and OAS. For someone receiving both CPP and OAS, here's an estimate of the total combined increase. CPP maximum 1,300 plus 39 DAO and 1,339 month OAS maximum 700 DAO plus 21 DAO a 721 month. So in total, a senior receiving both full CPP and OAS could expect an increase of $60 per month, or about $700 plus annually. This can make a significant difference to seniors relying on these payments for basic living expenses. The clawback. How does it affect you? The OAS clawback, also known as the OAS recovery tax, is an important factor to consider when receiving old age security, OAS. It's a reduction in the amount of OAS you receive if your income exceeds a certain threshold. What is OAS clawback? The OAS clawback begins when your net income exceeds a set threshold. In other words, the government starts to withhold part of your OAS payments as your income rises beyond the threshold. This ensures that seniors with higher income are not receiving a full OAS benefit, which is intended for those with lower incomes. The clawback rate is 15%, meaning for every dollar you earn over the threshold, the government will withhold 15 cents of your OAS payment. Net income calculation. Your net income is the amount listed on line 23,400 of your tax return. It's your total income minus eligible deductions. The OAS clawback is based on net income after all tax deductions have been made, so it's not just your taxable income that matters, it's your adjusted net income that triggers the clawback. Clawback thresholds. For a single individual, the OAS clawback kicks in when your net income exceeds $79,845 for 2024. If your income surpasses this threshold, the government will start withholding 15% of your OAS payments. For couples, the combined net income threshold for couples is $129,690. If both partners exceed this threshold, the clawback will apply to both individuals' OAS payments. How does the clawback affect you? The March 2026 update will see increased OAS payments due to indexation adjustments. However, for seniors with higher incomes, a portion of the OAS increase may be offset by the clawback. This means that while the indexation raises OAS payments by about 3%, the actual amount you receive could be reduced if your income exceeds the clawback threshold. It's essential to consider tax planning strategies to minimize the impact of the OAS clawback, especially if you're approaching or exceeding the income thresholds. What should you do? Your action plan. Now that you understand how the March 2026 update will affect CPP and OAS payments, it's time to take proactive steps to ensure you're getting the maximum benefits and managing your finances effectively. Here's a step-by-step action plan to stay on track and make the most of the upcoming changes. Step 1. Log into my Service Canada account to review your current CPP and OAS benefits. 100 words. The first step is to check your current benefits through the My Service Canada account. Logging in will allow you to review your CPP and OAS payments and verify payment dates. You'll be able to confirm whether the March 2026 indexation adjustment has been applied to your account, and you can track your benefit history to ensure everything is correct. Take a moment to familiarize yourself with your payment schedule and review any important messages or notifications from Service Canada. Step 2. Check for March 2026 indexation updates. 100 words. Next, stay aware of the March 2026 indexation update that will increase both CPP and OAS payments based on inflation. Since payments will increase automatically for eligible recipients, it's essential to verify any change in your payment amounts for April 2026 and beyond. By checking your payment statements, you can confirm that the inflation-based adjustment has been applied correctly. If you haven't received the correct increase or noticed discrepancies, it's important to take action promptly to avoid delays in receiving the updated payments. Step 3. Confirm payment dates. 100 words. Make sure to verify the payment dates for OAS and CPP. Payments for OAS are typically made on the third to last business day of each month, while CPP payments are issued in regular cycles based on your birth date. If you're using direct deposit, check that your banking details are up to date to ensure there are no delays. For those receiving payments by check, ensure your address with Service Canada is correct to avoid missed payments. By staying organized and proactive with your payment details, you ensure no interruptions in your income. Step 4. Speak with Service Canada if anything looks wrong. 50 words. If you notice anything unusual or incorrect with your benefits, don't hesitate to contact Service Canada. They can help clarify any discrepancies and ensure that you're receiving the correct amount based on the March 2026 update. If necessary, they can provide you with the next steps to resolve the issue. Common questions answered. In this section, we'll address some common questions about the March 2026 update and its impact on CPP and OAS payments. This will help clarify any uncertainties you might have. Will everyone get the increase? Yes. All CPP and OAS recipients will see indexation applied to their payments. However, the exact dollar amount you will receive depends on your individual situation, whether you're receiving full or partial OAS, and your income level will influence how much of the increase you'll receive. Do I need to apply again? No, you don't need to apply again to receive the March 2026 increase. The increase is automatic for current recipients. The CRA and Service Canada will adjust your payments based on the indexation applied to the CPI, so you won't have to take any extra steps. Can payment amounts change again later in 2026? Yes, quarterly adjustments based on inflation can cause your CPP and OAS payments to change later in 2026. As the CPI fluctuates, your payments will continue to be reassessed and adjusted to reflect the cost of living. This ensures that your payments keep up with inflation. Will GIS also change? Yes, the Guaranteed Income Supplement, GIS, will also be adjusted in July 2026 based on your previous year's tax return. If you're receiving GIS, the indexation will be applied to both your OAS and GIS, with the exact increase depending on your income and eligibility. How does OAS clawback affect the increase? For seniors with higher income, the OAS clawback may reduce the increase you receive in your OAS payments. If your net income exceeds the clawback threshold, 15% of your OAS increase may be withheld, offsetting the extra money you'd otherwise receive from the indexation adjustment. As we've seen, the March 2026 federal update brings significant changes to the way CPP and OAS payments are calculated and adjusted. These indexation adjustments based on inflation will provide much-needed support for seniors, ensuring their benefits keep pace with the rising cost of living. Increased payments. Both CPP and OAS will be increased by approximately 2-3% in March 2026 based on inflation, helping seniors manage the increased costs they face in retirement. Clawback considerations. If your income exceeds the OAS clawback threshold, you may see part of your OAS increase offset by the clawback. Seniors with higher incomes need to be especially mindful of this. Automatic adjustments. The indexation increase is automatic, and you don't need to apply for it. However, it's essential to verify your benefits and ensure your banking and contact details are up to date to avoid delays. Proactive planning. As these adjustments affect all seniors, it's essential to stay informed about any changes that could impact your retirement income. Regularly check your Service Canada account and speak with a financial advisor to ensure you're maximizing your benefits. Final advice: the March 2026 update is a step in the right direction for Canadian seniors. By understanding the indexation process, OAS clawback, and timing of your retirement benefits, you can take action today to ensure you're getting the most out of these changes.